This is Christopher Roberts, Traffic Trading Group, and this is your end of day market recap for Wednesday, October 22nd. Risk disclaimer in front of you. Everything that we're going through in this video live feed is for information purpose only. Please read the full risk disclaimer there. So, what did we get today? A bit more volatility. We are now essentially the price action is back to where we were once again last Monday. When you look at the indices, obviously there's a lot of rotation going on under the hood, and you're probably, if you're in some of these growth names, you're probably not very much liking the price action. But I will say this, a little bit of a silver lining early on in the video. I think this is actually some of this, I won't say all of it, but I think some of these moves are probably well needed to kind of set us up possibly for the end of the year. Also, we are in the middle now of earnings season, so you're going to see a lot of rotations based on some of the earnings reports that we're seeing, some good, some bad. But I think really we're kind of we're a little bit offsides too in terms of the areas of the market that have been just going up in a straight line. Not anymore, you could probably say, and some of the areas that have been really not participating are now starting to participate. And then finally, the last thing, which I really wasn't a fan of, which I talked about in yesterday's video, a lot of short squeezes. They kind of sucking the energy out of the market when you've got a lot of things like, of course, Beyond Meat's going to be mentioned a lot today, but Flowers, 1-800-Flowers. With Denny's, I saw was on the short squeeze list. GoPro, things like that. That's the bottom of the barrel stuff. And I think that also from a standpoint of the cycle of a rally, I think once you get to these names and they're squeezing these names, it's not a great sign for the market. And I went over that in yesterday's video. All right. So before I move to the charts, just a couple quick summaries. The VIX was up 4% today. At one point, I think the VIX was back above 20. I think it hit close to about a 21, and then backed off, and we're back under 20 once again in the VIX. Gold made a very interesting move today because that has been under pressure. That has been also, in my opinion, has been acting like a momentum trade. But that found a footing today and actually finished positive barely for the day, the GLD ETF. And you could see the silver miners. Look at the big move here. These were actually the biggest. These were the biggest moves from the open today. Silver miners climbed 4% today from the open. Also, energy did pretty well today. Uranium came back, still down 1.9%, but some of these names were really interesting from the lows. I'll try to go over a couple of those charts. Metals and mining still down 3%. Again, another another name that area of the market that was super strong, one of the leaders of this market, but again, correcting at this point. And in my opinion, some of these things that are correcting, it's perfectly fine and normal. Other things are going deeper than that. And again, it's the old analogy when the tide saying it wrong already. When the tide washes out, right, you're going to see who has a bathing suit on, and that's kind of the case with some of these areas that have gone up parabolic. And now that they're coming back in, some of which you can't find buyers for these things again. And they were just more or less a momentum type trade. All right, so let's get to let's bring up some charts here. I'm going to get rid of my screenshot here, replace, and we're going to go to the SPY chart. I mentioned just a minute ago that we really haven't gone anywhere. Yes, I think when you look at this in terms of a 1 hour chart, again, some of these things, they kind of they crack me up a little bit, though, just the way that the market moves like this. I was talking about this towards the end of last week. Now, what happened since the end of last week? Well, we rallied on Monday, didn't go anywhere on Tuesday, and are right back into here. So where did we start last Monday? Like right in here, right around like 664. Where are we now? Like right around that level, very close to it. So we're getting whipped around. And the main thing that, besides cracking jokes here, the main thing to kind of really take from this is to be very careful about how you're trading here. Dips are getting bought, but the moves up or the rips are really getting sold too. So if you're waiting, like I generally do, when we have a market dip, I usually wait to see when that dip is going to bottom out and when buyers are going to start coming in. If you're doing that, you're kind of getting creamed a little bit, because a lot of the waiting for the buyers to come back up is a gap up, and then we kind of don't do much from that gap up. And that was the story of, last Monday. It was also the story last Tuesday. We gapped up and didn't do anything. So as usual, a lot of the market gains come from the after hours market. Remember, buying the close and selling the open is much more profitable over time than doing it the other way, buying the open and selling the close, which is like hardly any gains whatsoever. It's a why I always repeat this in my videos, because I think some investors don't know how things work. But that's how, over time, buying the close and selling the open is one of the most profitable trades, since they have data on that, basically. But it's kind of what we're seeing here too. And a lot of the weakness is coming when the market is open. So we're basically right back to where we are, but there's a lot of rotation in this tape. Let's just kind of take a look at the cues. It's the same thing, guys. We're basically just we're back to almost where we were, going back to not this Monday, but last Monday. And again, like, we're finding we're not breaking here. We're coming into support and we're holding it. Let's just go back to the SPY chart for one more second here. Same thing. We got to the top of the value area for the month, and for now we're holding it. IWM also got down to the bottom of the value area for the week and found support there. Same thing. Basically right where we are, right where we started the week of back on Monday of last week. So eventually we're going to move out of this. We're going to move out of this range, but for now it's just kind of consolidating. We're just kind of consolidating a bit. U.S. targets Rosneft, Lukoil, and latest rounds of Russian sanctions. So there's a headline on the tape there about, we've heard that there might be new Russian sanctions. There they go. So I'm just going to put this on the interwebs as well. All right, so let's get back to the charts. So a couple of things that I think are standing out to me as we progress through earnings season is we're getting some, as always, we get good earnings reports and we get bad earnings reports. We generally have over time, because I don't have the exact date, but for instance, last quarter we did see some names that missed, and we always do. We see that every quarter, but we're seeing a lot more names that go up and beat and have a strong earnings reaction. I'm referring to last quarter. We're also seeing the same thing this quarter as well, but it's in really some of the unloved areas of the market. And I'll give you some examples. Here's AXP. I still don't see that many people talking about American Express, but hey, this had a good quarter. Again, it's just not that popular of a name. 3M. Look at what 3M has done on earnings. Look at the big pop and a run higher from even if you bought the gap up 158 to 166, RTX, tacked on gains today. Right? These are some really good moves, good earnings reports. What about this company? Look at this move. This is Winnebago. Right? And again, I'm sorry, it's not AI that's doing it. And I think because, if we look to some of the names that that's a hell of a candle, by the way, in Winnebago. But if you look at some names that had a good earnings report, for example, VRT had a great earnings report. The stock finished down on that. Now, my thoughts on this are there's a lot that's already baked into the price action. Remember, stock prices are forward-looking. Earnings reports, the first thing that you get from an earnings report is how they did the last quarter. Well, that's in the past. Right? That's not going to help you. I think newer investors, I'll see this from time to time on Twitter. They're like, I don't understand. They beat on earnings and the stock's down. Well, that's because that's what happened in the last quarter, right? Now, they are also, when they come out on the earnings call, they're going to give you, their vision of what the guidance looks like and what their future prospects of business are going to look like, and that definitely is good information to kind of take and to be an investor, about whether or not you want to invest your money in the company that's either growing, or they view that their next quarter might be troubling, right? That's good information. But as far as like, I'm seeing like people post these stupid things about the predicted market, about whether the predicted market thinks that a name's going to beat on earnings or miss on earnings. That has no value in terms about whether the stock is going to go up or down, because it really depends. And I talk about this every earnings quarter, but it really depends on whether the stock has rallied decently. Hence, VRT having a good quarter and the stock not going anywhere because the stock has rallied significantly, versus Winnebago having a good earnings quarter and the stock shoots up 28%, because the stock price has not really moved. Right? So it's very important to understand this principle. I also think too that if a stock doesn't go up anymore on good news, there's a lot of good news already priced into the stock. I'm kind of just saying this a different way around. But I also think if a stock goes up on a bad earnings report, the bad news is mostly priced into the stock, right? So the way you kind of have to think about some of these earnings reports. So just to kind of go back to what I said a few minutes ago, we are seeing some good earnings reports. They're just in some areas that people have really neglected. Netflix today, right? Might as well talk about that, right? That came all the way into the 200-day moving average. Yes, it was not an impressive earnings report. Yes, everybody talking about this Brazil write-off, but other than that, where's the growth coming from? I watched Netflix. I watched what was it, Black Rabbit. I really like that show. Right? It reminds me very much of where I used to live in New York City. Great show, loved it. But I don't know if they really have anything that's going to draw a lot more subscribers. So anyway, that's just. And by the way, I actually think that this, again, a little bit of a silver lining here, right? Uh, Netflix is the first one of the big companies that came out for earnings, and they're setting the bar low, right? And I think once the names, I think the important companies that are going to come out of the big names are going to be the Microsoft, the Google, the Amazon, right? Tesla just reported earnings, but they're not a name that really moves on earnings that much. They're going to come up when Elon comes on the conference call. The stock's either going to go up or down based on what he says about their future prospects. So I'm long some Tesla. I'm not really discouraged that it's down a few bucks. It's really going to depend on what Elon says during the conference call, because this company moves more on future growth than it does on like Tesla deliveries, right? All right, so that's my thoughts on that. But I think Netflix coming down sets the bar a little bit lower. Remember, one other thing too, another last silver lining that I will give you is that the market is seasonally weak at the end of October, right? So let's get all this, selling, distribution, in my opinion, let's get it out of the way in October, and then maybe we can focus on a strong 2 months. Last 2 months. I'm going to talk about a couple names that I thought were interesting for the day. The CLS is, to me, interesting. It was up 2.3% today. That's pretty strong in a group that's been pretty weak and kind of correcting a little bit. So I'm keeping my eye on that one. I thought Palantir was interesting today too. A lot of names are breaking down. Palantir is still kind of hanging in there. Now, the price action is really tight here. So reminder, just because the price action is tight, it doesn't mean it's going to always resolve higher, right? A lot of times price action can actually resolve lower. It just means a big break is coming soon. So the fact that Palantir didn't break today, I kind of view that as a little bit of a positive, as a lot of AI stocks are getting some corrections to them. Case in point, like some of my trading, I bounced out of hood today. Again, I did this before. My line in the sand may be different than your line in the sand. It's this top of value area, which is 129. It breached that, so I'm out of that. But I will come back and I will revisit that. Just because I get stopped out of a trade, I don't start crying and, oh my God, I'm never going to trade this stock again. Nope. you've got to be tougher than that. And you got to realize that this could get right back above its value area. And I will be getting back involved in this if it does. The level for me is 129.25. I'd also take a look at that 50-day moving average, which I think is important. Last time it kind of did one of these moves at the 50-day, and then it made a nice rally thereafter. KTOS, I took a couple targets in this yesterday. Unfortunately, I got stopped out of this morning. I just saw too many growth names coming down. But perhaps I didn't need to take that off. It's still hanging above the top of the value area for the month. So not bad there. I'll have to revisit that. Pure Storage is another name too that I think is also holding up pretty well here. Yes, down 2% today, but still holding above the 20-day moving average, still holding up. It closed just above the value area for the month. I thought this was impressive, right? Here's what OKLO did today, which again, OKLO is way overcrowded. Let this thing kind of come in, let all the hot money come out of it. It did breach its value area, so I would watch 128.57. And I know that's where, for whatever reason, investors are fascinated with this one. I like LEU better. There's less eyes on it, less hot money in it. It closed right at 312.55. That's a small win. But again, I'm not about catching falling knives here. Let's see if it can really hold in there and start to build. UUUU, 4Us, it was the star of this group today. A lot of option activity in this name. Not sure why, but they're really attacking this name with option activity. Was up 10%. Watch this level on the 1-hour chart. This works for a day trade, by the way, right back into where it was earlier in the week. This level 2290 is important, right into the bottom of the value area for the week. Another rare earth name was kind of stood out to me was this UAMY. But similarly, it rallied right into the bottom of its value area for the week. So it's got to break this to really do any more than, anything could bounce. We know that stuff in downtrends could bounce. For a real nice move higher, we've got to see a move at least above 1340. And I do like what this did today in getting back above its 5-day moving average today. All right, so that's a name definitely. I actually added a little bit of this one today. I gave this one a shot, and we'll go from there. So bottom, let's see if do I have any other charts that I wanted to go over today. I think that's it. So again, have to take these days one day at a time and try not to get super exposed or caught up into the volatility, into the unwinding. Oh, there is one more chart that I wanted to show you. I talked about how some of the unloved areas of the market. So I want to bring up SPLV. If you're not familiar with this ETF, it's a very good proxy to watch. So I'm going to show you what this looks like standalone. This is low volatility equities, right? So the top holdings in this ETF. Bring this up very quickly. SPLV. Top holdings in this low volatility ETF are things like ATO, Coca-Cola, which had a good earnings quarter, J&J, TJX, Evergy, EVRG, Duke Energy, Pinnacle West, PNW, some utilities in here, some retail, some pharmaceutical names too. But take a look at this ETF versus high beta. All right. So could this revert back up? It could. Right. This low volatility has been underperforming high beta for about 6-7 months at this point. And it's pretty darn oversold in relation to one another. So, I think it's okay to be looking for some of these other areas of the market. Again, just because they're not AI and things like that, it doesn't mean, just like I was showing the chart of 3M and a few other charts in there too. I think some of these things have a chance to outperform. I'm watching Bristol Myers. We saw some calls in there yesterday. I also took a position in Walmart today. I think this is this stock usually outperforms when there's hard selling in growth stocks. So